Job market remains very tight in Nashville. Unemployment rate right now is sitting at about 2.8%, and that is a very low unemployment rate. So there's a lot of jobs that are available in this market, which is always a plus. Welcome back to another episode of the Keeping It Real Estate Show. I'm your host, Mike Roeder, and today we're going to be diving into the Nashville multifamily market. We're going to take a look at the current state of the economy, supply and demand, and then talk a little bit about how we're underwriting deals in this unique market. So let's talk about the economy for a bit here first. A very robust economy, very diverse economy within Nashville. There's been a significant amount of population growth, especially within the millennial population, and very affordable living costs as well, which is driving the population growth as well. As everyone has probably heard, Oracle announced that Nashville is going to be home to their world headquarters. They purchased the land back in 2021. It's known as River North. That was bought for $250 million. And Oracle plans to build a campus that's going to include things like a park, a floating stage for concerts, a community clinic for testing healthcare-related technologies. The company also plans to build a pedestrian bridge to connect both sides of the river. And this is all planned to be completed by 2031. The healthcare and education sectors are major employers in Nashville, with institutions like Vanderbilt University Medical and HCA supporting over 50,000 local jobs. Back to Oracle, Larry Ellison, the chief technology officer, he was asked why Oracle is moving to the Nashville market, why they're moving their world headquarters there. And he said it was a very easy decision for him. He wanted to be in a health center, and it's the center of the industry we are most concerned about, which is the healthcare industry. So that's one industry that they are focusing a lot of attention and time and money on. And Nashville is really one of the world healthcare center areas. They have a significant amount of healthcare companies in the area. They have a lot of talent in the area as well. So a lot of individuals that are able to work in that industry as well. And this is one of the big reasons why we love Nashville. The medical industry tends to be a very robust job market, regardless of where we are in the economic cycle. And it also brings in many high-paying jobs. And with high-paying jobs, you have a lot of blue-collar jobs that come in to the market as well. Industrial market strength is very evident with companies like General Motors, Nissan, Mitsubishi, Bridgestone America. They all have sizable offices and manufacturing facilities in the area as well. Job market remains very tight in Nashville. Unemployment rate right now is sitting at about 2.8%, and that is a very low unemployment rate. So there's a lot of jobs that are available in this market, which is always a plus. So let's talk a little bit about supply and demand. Nashville market overall is really adjusting right now to a surge in supply. They had 12,000 units that were introduced last year, and that far exceeds the 10-year annual average of about 6,900 units. So right now we're going through an issue where there are too many apartment units in the market. However, when you look at absorption, it's also up. So demand increased by about 160% year over year through Q1 of 2024. So glad to see that absorption is up, but there was a significant amount of supply that's come on recently. And that's impacted some of the properties that we own in the market as well. We have a B-class property in Southeast Nashville. We also have an A-class property north of downtown Nashville by about 40 minutes. And those properties have both seen, more concessions, a little bit lower occupancy because of all this supply. Now, the good thing is, as we move through 2024 and 2025, we'll start to see some of that product absorbed. And by, I would say early to late 2026, we're hearing and we're seeing in reports that the majority of those new units, that oversupply, will be absorbed. And that's when you should see a lot of the rent growth come back into tact, which we're really excited about. So really, the new supply is a bump in the road right now, but if you can get through the next year, year and a half, 2 years, we'll start to see rent growth. We'll start to see the occupancy rates creep back up, and we'll see the concessions taper off. One thing that's been affecting that is the borrowing costs. They've doubled over the past 2 years. And this has led to a decline in new construction product. So only about 6,600 units began construction last year. So again, 12,000 units came on, only about 6,600 units began construction. And that's actually the lowest amount that has began construction since 2012. So a huge drop in construction. So you're actually going to see a tightening, of the number of units that are online, once you get to that 2026, 2027 mark from what we're seeing. Let's talk a little bit more about vacancy rates and rental trends. So obviously the new supply that's come onto the market has affected the occupancy rates and the rental trends. And particularly, it's affected the downtown and southeast Nashville markets the most. Owners in these areas have had to reduce rents and or offer concessions. So a lot of the new product, downtown are offering up to, 2, possibly 3 months of free rent just to get the properties leased up. And a lot of times when you're leasing up a property, you are offering concessions. But right now, more than typical because of all the units that have come on. West Nashville rents have decreased by about 5.1%, while downtown Nashville saw a modest drop of just over 2%. And then if you take a look at like Robertson County, they experienced a rent increase of at least 2%. So this is very sub-market dependent. It depends on what sub-market you're invested in. On a quarterly basis, rents increased by about 1.5%. Since Q4 of 2023 across the entire Nashville multi-market. So the market still has some nice, reasonable rent growth, but again, it's very pockety. Some pockets you're seeing rent decreases, where some pockets you're seeing rent increases. Nashville's vacancy rate is at a near 20-year high of 11.4%. Again, that's because of all the product that's come online. That includes properties still in lease up. So that has a big impact on that vacancy rate. If you take a look at stabilized properties in the Nashville market, they have a lower vacancy rate of about 7.5%. So that plays into our strategic approach when we're looking into investing in Nashville. We're looking at acquiring B and C class assets to help insulate ourselves from the supply issues coming online. Now, with multifamily in general, when you have that much supply coming online, there is going to be some sort of trickle down effect. So if you have A class properties that are offering 2 months free, you may have some of your tenants in a B class property move up to that A class property. And then you may have to offer some concessions and lower rents on your B class property and so on. That can trickle down to C and D properties as well. What we're seeing is the A class and the B class are being affected the most. The C class, very little, because there's a pretty large gap in between C class properties and B class property rents. But again, we're going to continue focusing on purchasing B and C class properties looking ahead in the future. Let's take a look at the market forecast. Short-term projections indicate rent decreases may persist through the first half of 2024. That's what we're specifically seeing with those B and A class properties. Recovery is expected to start towards the end of this year in 2024. So that's great news. Again, as we move closer to 2026, you should see more and more recovery in the market. And then over the next 5 years, rent growth across Nashville is anticipated to average an increase of about 2.88% according to CoStar's projections. And that's a very healthy number in our opinion. This forecast points to gradual market stabilization as that excess inventory fills up and as it's being absorbed into the market. So our conclusion, despite current challenges posed by incoming supply, Nashville's consistent job and population growth, coupled with its economic resilience, reinforces our confidence in the market's mid to long-term potential. So that's it for today's episode. Thank you for tuning in to the episode of Keeping It Real Estate. We hope you enjoyed it. If so, please share and leave us a rating and review. It helps us tremendously. Thanks again for tuning in. Keep listening to our show so you can become the best real estate investor possible. And we'll see you again next week for another episode.